Okay. Did you see my share screen about the UVC, Krida Virtual Class? Yeah, this is our dashboard for the specific course, especially for your financial technology and data analytics. And in this course or in these dashboards, you can access this about the, Oliver is coming. Yeah. In this dashboards, I offers you about the materials and maybe for the recording of this class later, and then for the quizzes. So you can check about your access points, and I see all of you has been enrolled as the participant in this class. I see about the Clinis, Yasins, Oliver, Fenis, and Citapils. And for this is you try to explore your UVC dashboards. I think it's like the finish is 5 minutes ago, and I think everyone is trying to connecting with these dashboards. So you can check your sessions. This is for every sessions that will be dated on your dashboards, starting for 12 February. And last week's we have a first meeting for 19 February. And before that, in the sessions one, or sorry, in the past meeting for 12 February, I post about the specific about the course descriptions for these courses. You can see about the course objectives to summarize about the global fintech sector and for emphasizes about the business data. And for the design of this course, we are designed for two kind of meeting using the synchronous meeting by Zoom like this one every Monday for 5 p.m. in my country. And for the second one is about the asynchronous task using the UVC. You can access the materials, the recordings, and quizzes. In this course, you'll be evaluated with the 3 points. The midterms and final test is about 35%, and the assignments and overall is 30%. I also uploaded about the references about fintech book that we are used for until the mid semesters and the data analysis ebooks until your final test. Okay. This one is about the materials for last meetings or the last weeks about the introductions. And today, we are taking about the second material using the fintech themes. Okay, let me start the meetings using the fintech themes. Okay, is everyone see my screen?
Yes, sir.
Okay, thank you for responding, Vanis. Yeah, today we are discussing about the fintech themes. What is the fintech themes? Is categorized as any kind about informations will be categorized for the development of financial technology. In our focus, we have the three positions about the fintech themes. We're starting with the developments or the fintech revolutions that we learned last weeks. The fintech revolutions is starting about the rising of startup companies. So any kind of the startup companies will be combined with the some regulatory, and then it will be for compliance for the fintech player. There is the specific term for persons or organizations who enroll in the financial technology industry. We call the fintech players. And then we also have some many regulatory compliance for the companies over the world, because the banking sector, the finance sector, and also with the technology sector is crossing out of our country, this out of the border, not only specific in my country, Indonesia, or maybe in your country, Philippines, but you can use any kind of banking applications or making some financial applications over the world. So because these inventions, these revolutions, our business model has been disrupted. The rising of fintech will be disrupt about the business model, especially for a banking sector. So, if you have any, if you think about this, banking and fintech is a different sectors. Yes, because basically in the International Monetary Fund, we have classified two different sector, banking sector and a fintech sectors. So I need to ask you, or you need to make some argumentations. What do you think about the banking sector and fintech sectors? Is these two sectors should be make some collaborations, or they should be make some competitions? What is your opinion, Penis? It should be
Sir,
collaborate or competitions?
as for me,
Yeah.
um, bank and financial technology should be collaborator because if they work together, they can create co- um innovative financial services to provide to their customers and so that it can also grow the services of the financial sector.
Mhm. That's a good opinions. Thank you, Penis. How about you, Oliver? What do you think? It should be collaborate, make some collaboration or competitions?
Hello, sir. I'll just to ask if I am audible.
Mm-hmm.
Am I audible, sir?
Yes. Why? Why?
Hello.
Can you give some explanations?
Am I audible, sir? Um, okay. So, for me, sir, I guess banking and fintech should not be competing with each other. Instead, they should collaborate because I
Mm-hmm.
believe that collaboration in both would lead to or would cascade to more efficient financial system.
Okay. I think your idea is rather similar to the Venice. Yeah. How about you, Clinis? What do you think about the banking sector and fintech sector? I can hear you, Clinis. Okay, let's switch to the Citadel. What is your opinion, Citadel?
My opinion, sir, I think banks and financial technology sectors should work together because if they work together, I think they will provide an effective and efficient service to their customers.
Okay, thank you for responding. Working together, it means similar with the collaborations, right? So if you think that they should be separate in a competitions or they should be collaborations, we will find the answers. But before we find the answers, let's see about the short video about how fintechs will replace about the transactions between the traditional banks. Sorry.
Financial services and fintech is all about ease, access, convenience, transparency, affordability, and being able to delight your customer or being able to delight your consumer. One of the aspects is that's making finance invisible. It's embedding in everything we do.
embedded finance is very interesting in every other sector, whether it's healthcare, to the way that you do your gym and nutrition meals and things like that. Having embedded finance in that, or being able to buy something online and pay for it over a period of time, all of this is only possible because open banking enabled that. Rarely do we see a fintech company be able to mimic a full stack of a bank. There are less than a handful worldwide that are doing it that way. So I think majority will not happen that way. Majority will be the banks meeting halfway with these startups and really providing us as the consumers and businesses the most value. When the partnership and cooperation is at its peak. So we'll get the safety and security and everything of a bank, and we'll get the user experience and bells and whistles that we get from the startups. And the extensibility of those two working together is, I think, the happy moment for us as consumers.
Okay, the happy moment about fintech and banking is a working together. So all of the people thinking that traditional bank will be changing, but the transactions, the security, and also with how the way for peoples change their transactions or with their money at the models. So the fintech will be collaborates on fintech will be support between the transactions for the traditional banks to the kind of the modern of banks. So this is the opinions for many people that will have a concerns about the financial technology moving in over the decades. So let's see about the differences between the bank and the fintechs. So for this video, at the starting point, we find out that they should be make some collaborations. So let's see about the inventions. This is a different kind of inventions between bank and the fintech industry. Banking is starting in the 1950. The first time invent about the power of credit cards. So, and you can, if you can imagine, so before the 1950, a banking transaction is using by the card credits or maybe the debit card. It will be changed after these inventions. So, 20 years later, they found about the using automatic teller machines or ATM. That's a long time ago. And after the 46 years, the accessibility between the traditional banks has been changed. So every people is using the smartphones, and they are the involvement about the big data, the kind of social media that could be engaged with our banking data. So we also have the free of cloud computing using the emails or maybe with another kind of the messengers. This is the starting point about the changing in the bank innovations. And for the fintechs itself, it's starting in 2014 because the banking has been advancing for this technology. They make some contactless technology, they create some digital wallets, and also with the cryptocurrency. So we have the different timelines using innovations in the banking sector and the financial technology sectors. In the current years, or maybe in the last of 2020, the financial technology or the fintech sector, they are moving using the more advanced technology. They're having a set of tools like the software components or the systems that make people could be flexible or easier, or maybe they have to create some very happy experience using a banking on these hands. What is the meaning of banking on his hands? They can use any kind of the banking services using the smartphone, using the gadgets, and they are bringing new services to the markets. It means this is for the capital markets. not only for the physical market. So, for the current generations, they called about the digital savvy customer or digital savvy technology. They can moving with handle all of this kind of change using the API, applications programming interface. So when we talk about the fintech player and banking players, we can summarize about the video and with these innovations. So all of the player in the fintech and the bank, they have much to gain or they have seen many of advantages with working together, and they are make some movement, create movement for acquiring about the advanced technology. So with these parts or with these explanations, it's conclude that the fintech players and the banking player should be collaborates. They should be working together, like Sitabel said, that they should be work together and they will be acquiring about the new advanced technology, more handle about the technology on hand. So banking will be very easy, very accessible using our hands. To compete in the global sectors in every industry, not only in the banking sectors, we need to create some global compliance between the fintech industry. We have the three key of compliance. The first one is about the financial systems. To compete in the differences or the heterogeneous of inventions or the advanced technology, the fintech sectors should be have the own financial systems. They can invent, they can create, but make some differentiations between another applications or another's movements. So the second point is about never try about the regulations in every countries, because if we can uh, joining about the markets, especially for financial markets, you can through the regulations, passing the regulations using the banking's compliance, or maybe you can join with the country's regulations. So we cannot against the rules because every country have the different regulations, especially for their financials. And for the last points or the last key is building about the security systems. It's talk about the security systems and the trustworthy system. So because everyone's using the financials and banking is based on the data or identity cards by the customers. So the security of ID cards, if our customer of our ID cards, it should be defended by the secure and trustworthy systems or the services. These three kinds of the global compliance will help us or will help the fintech player to be compete in the global world. Let's see about the examples in every country. So we're starting with the best or the biggest financial industries or the financial markets. For starting for the United States of America. In this country, it's very single markets. It's very segmented with single markets, but they have the complex multi-level regulations. So you can find any kind of regulations, even they are in the single kind of markets. So as the finance, in the finance behaviors science, we called about the highly fragmented of financing sectors. You can compare to the European countries or maybe the Asian countries, but the United States is called with the most promising countries in the finance. So they have only one regulators, the United States Banks of America. This is the central banks of America, and they handle for any kind of transactions in the markets. Moving to the European countries, the second ones after the biggest from the United States of America. The European countries is still complex, but they have the lots of harmonized regulations. the regulations is not complex like the US, but they still can harmonize, or they can still be combined or connected between one and two countries, and they are make some connections, great connections between 27 of member countries. They implement in 2014, and they found about the one or the one only, or the name about the single supervisory mechanism, or SSM. What is the single supervisory mechanisms? It's combinations about the banking sectors in European countries. Let's see this short video to know you, to learn about how SSM works for the European countries with this bank.
We explain the single supervisory mechanism. Remember Sarah? She recently learned how the European Central Bank and the Euro system help to keep prices stable in the Euro area. But Sarah is concerned. She knows that the ECB works hard to maintain the value of her money, but how does she know that the banking sector is healthy and her savings are safe? The global financial crisis showed how problems in the banking sector of one country could spread to other countries. The euro area was particularly affected as different countries applied different standards when assessing banks. To ensure that the same rules are applied to all banks in the future and to permanently monitor their health, EU countries created a supranational supervisory body. This is the single supervisory mechanism in Frankfurt, Germany, led by the European Central Bank, working closely together with the national supervisors of countries that use the euro. Non-euro area countries may also participate if they wish to. The single supervisory mechanism, as a key element of the banking union, aims to make the euro area more financially stable and help our economy to recover. The European Central Bank directly supervises on a day-to-day basis the largest banks, while the national supervisors continue to monitor the remaining banks. But what does the single supervisory mechanism actually do? Sarah is curious. Its main task is to check that banks comply with the EU banking rules and tackle problems early on. The single supervisory mechanism looks at the way in which banks borrow, lend and invest money. In other words, it assesses whether they are fit to operate. What's more, the single supervisory mechanism has the power to require banks to hold more money in reserve as a safety net in case of problems. It grants or withdraws bank licenses and, in some cases, sanctions banks if they breach the rules. The single supervisory mechanism intends to make banks healthier and more resistant to outside shocks like financial crises. All this is good news for Sarah, as the single supervisory mechanism helps keep banks healthy and Sarah's savings safe. To find out more, go to www.bankingsupervision.europa.eu.
Okay, and this video tells us that these mechanisms have been support for every banks in the European countries. So they can make some innovations, they can survive with the financial crisis, and they can work together with the single mechanisms that will be advising by the one sport supervisors. So this is how they prevent the bankruptcy, how they still struggling in the financial crisis conditions, and how they can survive between the European countries, and more that another countries could be joined with this single supervisory mechanisms. Yeah. That's the two examples from United States of America and for the European countries. Now we can see about the Asian countries in our regions. We start for the China. The China has the specific financial systems. They call China financial systems. They have been fragmented with the high regulations in investments, in deposits, and lending transactions. So they will be separate out of the this kind of for investments. This one is for deposits, investments, and this one for lending transactions. So we can see about the any kinds of uh DX of the banks in China. It's very different with the United States of America. Let's see about the banks that have an actions to save the treasury of the governments. The China notes that the People Bank of China. The second one is to having some corrections for the foreign exchange transactions. They called with the Bank of China. It's a different things. The People Bank of China is different bank with the Bank of China. So the next bank is about the CDB, the China Development Banks. It's having some objections about the foreign capitals. And if you have of you wants to make some international investments outside from the China. So this bank will be help you to create with the best capitals and the best investments. The next one is about the mechanisms, the banks that could be as the centralized for lending fund and constructions. In China, the notes about the China Constructions Bank or CCB is having the obligations to lending and constructions. And the last ones, because we know that the China have the great of agricultural area, they have the Agricultural Bank of China for lending transactions and specific for the agricultural sector. Why China? Because China is the best examples in our region, Asian countries, and they do with the highly regulations for their financial sector. Another examples for the Asian countries is India. India is similar to China. They can have the best examples about the how to manage the financial system in our country. But India have the multi-level of financial systems. They have a 4 or 3 layers. For examples, for the as the financial regulator and supervisors, they know the Reserve Bank of India. And the second layers, they have the difference bank to act about the capital market and the mutual funds. It's talk about the investing. It will be noted by the Securities and Exchange Board of India. The last one is to cover about their insurance sectors and their pension funds. The India calling about the Insurance Regulatory and Development Authority to save this insurance sector or the pension fund for their peoples. So the last examples is comes from the OECD countries. There's a lot of countries working together for the oil and the economics and for the new generations of this country. So they are make some agreement in 2012 to fostering about the laundering of money and the financial of terrorism between peer-to-peer lending, business lending, and business to business. These regulations is will applied since 2012. So it's still working like now, and this kind of regulations will be help to against about the financial terrorisms in the OECD countries. So how about your countries? Philippines. Philippines is a part of the member in OECD countries. So your countries will be connected with these regulations from the money laundering and financial terrorisms. Okay. With these explanations, so you can make some choices. Which fintech that you prefers? Are you prefer to be choose by the local fintechs or the global fintechs? What is the mean? Local fintechs, it means that you can choose by your fintechs that should be exist in your country, Philippines. Or you can choose a fintech sectors that could be make some generate some transactions over the countries. Maybe Philippines and Indonesia, Philippines and Malaysia, Philippines and Singapore, or for the good pan Philippines to offer the world, offer the countries. And the second point is after you choose with the local and globals about the fintech sectors, you can make some decisions. Do you want to make your fintech technology by yourself, or do you want to buy from another vendor of technology, or you just make some partnerships with the vendor of technology? Because the investment in technology is sometimes we need to deliver lots of the money. Or in big countries, we having lots of huge investment in our technology. So with this in positions, we can learn that the lending capitals in the 21st century has been changes. They are not only prefers on the traditional banks, not of the peoples going to the banks and lend the money or maybe have some guarantee. Not at all. In the kind of the situation, it's 21st century. The credit money is will be different in the modern economy. So the money is not only for the physical money. We talk against with the virtual money or with the digital wallets or maybe with the QRIS transactions or the barcode transactions. And then uh, the challenge is about the data and technology security because every connections in our country or between countries will be connected using the ID cards. So we need to secure our data, we need to secure our technology, and every time we need to secure about the digital ID. But we still have the benefits. If every transaction is going digital or with the virtually, the cost of transactions will be low, will be impacted with the reducing of the cost of transactions. They need they doesn't need a lot of tellers, lot of the customer service because we can swipe our cards using the credit card or debit card, or sometimes we can pay the bills in the next month or other the next month. So, but in the good positions or in the a good news is we can use the Bitcoin, we call the Internet of Money, to make some transactions. So this is the change, the era of change in the financial sectors. So the banks or the banking players will pull away from the lending risky clients. So if you are a risky players or risky clients, you will be moving out by the banking sectors. So you can moving to your fintech sectors because they could be covered about the micro players or the small players. So the market lending platform have the mass scale opportunities to capture these risky clients. So risky clients is cannot be covered by the banking, but they can cover by lending platform using the financial technology or the fintech technology. So this is the map of the timeline of innovation in fintech sectors. In the first meetings or in the our last meetings, I say that the first invention in banking sector is about the invention of credit card in 1950, and then they are moving using the ID card identifications in 1960, and then they are changed because they have a cyber attacks in 2005. The United States of America has been attacking, and another of the market capitals in the world is having the cyber attacks the first time in 2005. So after that, we need to strengthen our trust and trustworthy systems and the security systems. So the next invention is comes in 2014 because the banking applications also connected with our social media or our websites or our mobile application. And until now, it's still moving using the logins or with the connections between your banking applications and your social media. And starting in 2015, this is the first time recording about the digital transactions in the world. So we can say that the fintech will be starting in 2015. So it's not like our thinking that the pandemic of COVID-19 starting with the innovation in fintechs. No, that is wrong. 5 years before the COVID pandemic, the digital transactions was be recorded. So the first time that we call the fintech has been moving or has been arise is in 2015, not in 2020. Okay, I think that's all that I should deliver to you with this themes of the financial technologies today. And if you have any questions, please you can open your mics or maybe open your screens, or you can say anything that we can discuss in these times. Any questions from Glynis, maybe Cittabel, Oliver, or Fennis? None so far. Thank you for your responding, Cittabels. Fennis, Oliver, or Glynis?
None, sir. Thank you.
Okay, thank you for your respondings. Okay, if you have doesn't have any questions to be asked for me, I will show you again about the exit ticket for these sessions. So you can check with your Ukrida virtual class or UVC. In this ones, this session 3 in 26 February is today. I enclose about your fintech themes, your materials, and the quiz ones. This quiz one is cover the material from introductions to fintech themes. I offer you 15 minutes times for answer these questions. So, but it's depend on your starting points. You can start now or you can start later, but this course will be this quiz will be closed in this day. So if the day is changing, you're missing your first quiz. Okay. But for good news for you is even you have 15 minutes to answer the questions, you have two attempts. So if the first attempt you have some distractions or maybe some troubles with your internet connections or maybe with your uh, you have maybe you running out of time, yeah, you can make some second attempts. So it's only for helps you to over or to cover this quizzes. So you can choose by the best time for you, which one there is your internet connection is stable. So I give you offers until this day off, and you have two times of attempts, and the kind of the questions is connected in the three category. It could be in true and false options. It could be in multiple choice options. And one point is about dragging the text. You need to drag the text to the box and will be evaluated by the systems. After you submit these quizzes, the score will be calculated automatically. So this is information for you to do the quiz number ones for the materials today. Okay, thank you for responding, Clinis and Olivers. Okay, any question for quizzes? All of you have access to Okrida virtual class? Okay. Angelicia, is there any kind of sessions about the international student, how to using virtual class, or maybe you can do with the dashboard with the materials, the recordings, or maybe with the quizzes?
There's a guidebook for it, but if there's any problem, they can reach out to me.
Okay. If you have any problems for Clinis, Citabel, Oliver, and Venice, you can ask Angelicia, or maybe you can create with some forum in your virtual class, and I can ask with your questions. I can answer your questions over the virtual class. Okay. Thank you for coming for these sessions. Thank you for Angelicia. Thank you for Glenis, Citabel, and Oliver, also Venice. And we'll meet you again in the next meetings. In the UVC, you can we can find about the sessions in 4 March. In 4 March in the Monday. Okay. Thank you for everyone for coming and see you next week.